Hello everyone. To be honest, we've learned a lot about loan. First, mortgage, a house loan, then a car loan, a student loan, and today we're going to learn about small business loan, a small business loan. Okay. So, a small business loan is just that it can be used for anything else, just like other things. Just like car loan, we can't use it for anything else except for cars. So small business loan is just as the same. Small business loan is like a small business loan. Okay. So it is only used for small business only. So when you start your own business, you're called an entrepreneur. In order to get a small business loan, the bank will require a well thought out, well written business plan. So, it didn't work like you were going to a bank, you go to a bank and you said, okay, so I have this really wonderful idea about like an ice cream shop. Maybe, I'm gonna use this money for this. I'm gonna use this money for this ice cream machine, this money for for table and chair and all kind of stuff. And then I'll buy all the ingredient and make ice cream. Everyone's gonna love it. Um, can I have 100 buck? I mean, can I borrow $100,000? So obviously, the bank is just gonna say no because they're not sure. Maybe you make up that story to buy something else. They're not gonna be sure. So they would need like a well thought, well written business plan. It must be written down. So the plan need to say why you wanted the loan. Let's say so why you wanted a loan. You should write, maybe if you want to open like a shop, you might say I need to open up a shop. And then that's the first. Then you're gonna write down what you plan to do with it. So you're gonna plan to buy a shop. You're gonna plan to buy ingredients and that. And then most important to the bank of all is how you will plan to repay it. So yes, interest rates are generally between 6% and 10%. So the rate will be determined by the amount of risk the bank is willing to take. The higher the risk is, the higher the rate will be. So usually it's just gonna be about 6% to 10%. I mean, like, it's a lot. So remember that you should pay back the loan as soon as possible. Yes, no matter what loan it is. Small business loan, car loan, anything, any kind of loan. You should pay back the loan as soon as possible because compound interest add up really quickly. So I said that when you planning to loan use to borrow some money from the bank, you have to plan how long you plan to repay it back. So let's say at 1 year you won't be able to do that, but maybe in the second year you can be able to do that. So you would say to them, maybe in second year I can pay that back. But if you already have the money in the first year, then you should pay it back as soon as possible because in the second year compound interest is gonna add up to the first year with interest too. So because you are paying interest on the principal plus the interest from the previous year, the first year. So when you got the money, you should pay it back as soon as possible because you don't want to be in loan for a long time. Because if you don't pay it back, then very quickly the money will not gonna be. So let's get a number. Let's say you borrow the bank $100,000, and if you don't pay it back and you just wait it like that, then it's just gonna be $200,000 very quickly, in just a few years. So let's practice. Let's practice, guys. Okay, let's see. What you call someone who start their own business? An entrepreneur, not a principal. A principal would be like, I mean, like, principal. A principal is the original money. The principal is like the original money that you have in your that you borrow. So it's not gonna be a principal. Not a principal at a school, because the principal at a school will be PLE at the end and not PAL. Not gonna be a very revenue either. But after when I said before, an entrepreneur is someone who started their own business. What type of debt would you use to buy a piece of machinery when you are starting a small business? So you would want to buy a piece of machinery when you're starting a small business. Let's say, you will want to buy a ice cream maker machine if you are opening up an ice cream shop, or a photo machine if you are wanting to like open up a Photoshop or photocopy shop. Yes. So B will be the best answer. Not gonna be a student loan, because that doesn't have anything to do like with something the student will need for their study. So definitely not gonna be A, but it is gonna be B. But not gonna be C, because mortgage is a house loan. When applying for small business loan, if a bank believes that your business plan is somewhat risky, they'll probably when applying for a small business loan, if a bank believes that your business plan is somewhat a little bit risky, they will probably think about it again and consider if they're gonna charge more interest or less interest. So I want you to do this by your own, because this is the last question. Thank you for coming and have a good day.